Well, the holiday season is in full effect in the city of Seattle. And the question I have for you is real estate on your wish list? If so, we're gonna get you all squared away here. This is an episode where we're gonna discuss the monthly market update for the month of November 2023. We're gonna get you dialed in to what you need to know. Hello and welcome back to my channel. My name is Matthew Chapman and I'm a local realtor here in the greater Seattle region. I specialize in helping savvy sellers who want to sell right, want to sell smart, as well as working with buyers looking to relocate to this region. I've helped plenty of buyers from Florida, Texas, Indiana, San Francisco, you name it. I've probably helped them. So feel free to reach out, message me directly. I get plenty of people to reach out to me that just have questions about real estate. But if you're new to my channel, please take a moment and just click subscribe down below. That way you're going to get notified of any future content that hits. Also, you can check out my Instagram page at Chapman Homes HQ. That way you're going to get more up-to-date information. Now in today's video, we're going to cover monthly market update for the month of November 2023. We're going to get you all squared away and dialed in on what you need to know if you're considering buying or relocating to this region. So let's get right to it. For the month of November, if we're looking at the east side, now the east side, if you're new to my channel, refers to the suburbs of the greater Seattle area. It's on the east side of Lake Washington. So we're talking about Bellevue, Kirkland, Redmond, Issaquah, Bothell, Woodinville, pretty much all the suburbs on the east side of Lake Washington. That's what I'm referring to for the east side statistics. And the monthly average home sale price for the month of November was $1,420,000. And that is compared to this time last year of $1,350,000. So what does that tell you? Well, that says that we've actually increased our home values by 5% in the last year. Now, last year at this time, 27% of the homes were selling at or above ask. That's compared to this year. Right now, we have 48% of the homes selling at or above ask and a 1.5 months supply of inventory. So all that to say is we are doing slightly better this time at this moment in time than last year. So now let's look at the Seattle market. Looking at the Seattle market. Now, Seattle is made up of roughly 50 different unique neighborhoods in Seattle. It's one of the things I love. There are no cookie cutter neighborhoods in Seattle. We got beautiful craftsman homes to modern homes. Anything that you are looking for, Seattle probably has it, except cookie cutter. Now, in the month of November, the average home sales price was $900,000. That's compared to last year. At this time, the average home sale price was $950,000. So what does that tell you? Well, it tells you that we've actually had a decrease of about 5%. And last year at this time, 48% of the homes were selling at or above asking. And this month, about 54% of the homes are selling at or above ask. So people are starting to figure out the right price point to sell their home in the city of Seattle. And we've had about 1.8 months supply of inventory. So those are the statistics. That's the raw data. The real estate market is not falling. The sky is not falling in the city of Seattle. Things are actually trending upward for the most part, slightly down in the city proper. But that right now is just really kind of seasonal norms of what we're experiencing. All that to say is that is pretty much seasonal norms of what we are experiencing, and we expect things to pick back up in the month of January as is customary for this area. Things tend to pick up in the month of January. Now, I want to talk about what is truly happening in the real estate market. I gave you the raw data, but let's take a deep dive into what is truly happening. So it's no secret, interest rates are what is driving the market, and we just hit record highs in the last 10 years for interest rates. Some interest rates hit around 8%. And that really had an impact on the market. The thing is that there's really not much inventory. And so that's why you see prices stable, going up, maybe slightly down for the most part, but there really isn't too many people that want to sell their home. Virtually the move-up buyer is gone. And so that's keeping inventory at relatively still really low numbers, because who wants to sell their home when they're sitting on 2 and 3% interest rate? I just talked to a friend the other day that has a 1.99% interest rate. That's a pretty good rate. I'd love to hear if you have a better interest rate than that, so message me in the comments. But all that to say is, why would you want to trade your 1.99 or 2 or 2.5 or 3.5% interest rate for a 8% interest rate? It's just very unlikely that a seller is going to want to sell to do that unless they're going through a divorce or some traumatic or big life-altering situation. And so that's why we're still seeing relatively low numbers of inventory. Prices are staying flat or going up a little bit in the suburbs, and we expect them to go up even more this coming year. And what we're seeing in the market right now, yes, we're still seeing multiple offers on occasion. They're becoming less normal, multiple offers. offers. But when we see multiple offers, like just yesterday I had 3 offers on my listing, oftentimes they were starting below asking and they were escalating just a little bit above asking. And so back about 2.5, 3 years ago, we were seeing homes escalate $200,000 to $300,000, sometimes above asking in the average price point here. And that's just not happening anymore. Super rare. That'd be like a unicorn home that you just don't often see. And so the norm here is that you will probably be the only offer on the table. And if you are competing against multiple offers, most likely it's just going to land slightly above asking. So that's good news for buyers out there. So we have seen a slight uptick in activity. We're about to head into December here, and we are seeing a slight uptick in activity only because the Fed has come out and they've said, look, we think inflation numbers are pretty good. We don't plan on raising interest rates anymore. And actually interest rates started to go down in the last couple of weeks. And that we noticed as realtors that buyers began to get more confident. We're starting to see more activity hit the market. And we really expect that to continue into the coming year. In fact, the magic number for the interest rate is said to be 6%. And if interest rates go below 6%, we're anticipating another buying frenzy, if I can use that word. I don't think it's going to be as chaotic as it was 2 years ago, but we are going to see a lot more competition, multiple offers. Certainly the multiple offers will escalate well above asking, unlike that we're experiencing now. So all that to say is if you are a buyer right now and you are looking at homes in the city of Seattle, I really believe, and I'm telling my friends this, that this is a unique time to buy because you have an opportunity to buy with less competition, with a lot of power behind you. And if you can afford your monthly payment and get into the house that you want, I think there's very low risk in buying now and banking and hedging your bets that interest rates will go down, that you'll be able to refinance. So if I were in your shoes, I would be purchasing a home, making sure that I could afford the monthly payment right now with the current interest rate, and just feeling very blessed if interest rates go down. And I do think they will go down. I think third or fourth quarter of next year, most likely, we will see them hover around 6%, give or take a little bit there. All right, now none of us have a crystal ball, and that's why I say that you really don't want to purchase a home if you are being squeezed so tightly that you can't afford the monthly payment. So make sure you can afford that monthly payment. And if you can, I think you're able to get into a home with less frenzy, less competition, and with a lot of power. So that's a good thing for a buyer out there. And most likely you're going to be able to refinance. Now, I want to give you some more advice on what is happening in the real estate market right now, what we're seeing as realtors. So my final piece of advice is this: keep a long-term perspective on the real estate market. Yes, we have high interest rates right now. Yes, home values are going up, or they flattened a little bit, but everybody wants to know what is going to happen next year or the year after that. And I can tell you that none of us really know. We're given our best take. History tells us investing in real estate in this region, you're going to do well, because on average, the Seattle market has gone up 6.9% a year over the last 80 years. Those are pretty good stats. What I'm telling you is it's very low risk investment if you are considering purchasing a home here and holding it for 5 years. If you hold on to your home for 5 years, most likely you're going to do well. So it's about finding the right home, and it's about buying when you are financially and emotionally ready. So that's my take for the real estate market for November 2023. So if you've got questions about the real estate market, or you're considering buying or relocating or investing here in this market, my team and I, we would love to assist you. So don't be shy. Don't hesitate to reach out, pick up the phone, give me a call, shoot me a text, drop a message in the comments below. You can check me out online at Chapman Homes HQ. I'm Matthew Chapman, and I'll see you next time.